Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has retreated slightly after Friday's strong surge and the market slightly hesitant towards that 67-cent level, even though its counterpart, the US dollar index, remains flat around 105.80. All eyes will be looking this week to the non-farm payrolls report, with the forecast expecting a slowdown in hiring to 196,000 jobs added in June, previously from 272,000 jobs added in May. Due to the shortened trading week in the US, as the markets will be closed in observance Independence Day holiday on Thursday, the markets will likely start being a little bit somewhat to the thin side or thin liquidity, and therefore could see a little bit more to the whipsaw price action. Nevertheless, as the Australian dollar retreats, I do feel the market will find support somewhere around 66.40, which is close at bay, or with a base holding around 65.70.80, which coincides with the 60-day simple moving average around 65.94. After displaying a gap open on Monday, the euro dollar managed to fill this area, as you can see here from the whipsaw price action, and now is in a prime position to rally higher, due to the fact that the technicals are firming and therefore look towards a resistance of 107.65.75. It did take a stab there overnight, but likely to see a re-challenge and look on towards 108.30.40 as the initial target. Any pullback towards this key level of 106.70.75 should again find demand, as we have witnessed this a few times. The Japanese yen took a further round of weakness Monday and continues to face bearish pressure against the firmer US dollar, after breaking above 161 and now looks to around the 161.5. With much surprise, there is still no sign of any intervention from the Bank of Japan, given the fact how weak the market is, as we are trading beyond the so-called intervention level that we saw back here in April. Nevertheless, with extreme overbought conditions from the RSI and an overheated ADX, the view still stands for a whipsaw price action and a significant downturn, and look towards this region that coincides around 160 and lower, where the trend line holds, seen around 157.70.75. If you are trading dollar yen, I still advise to closely monitor for any further downward movements in case we see a possible intervention from the Bank of Japan. The pound was whipsawed overnight as the UK election awaits, and no doubt we could see a little bit more due to the thin liquidity, as the US will be closed in observance on Thursday, the same time as the UK election. So still trade cautiously, and if we see any movement towards this key level, 125.60.65 could stage again a bounce, and I feel the market may actually eventually recover back to 128 in the broader terms. Turning to commodities, we can see that the gold price action has recovered further and now looks towards its key level, which is seen around 2,340 to 42, as a break here would negate this engulfing candle and possibly reinstate the upside to around 2,380 or around 2,400, where I've outlined here. It is a bullish move, and keep an eye on these technicals in case they firm up. But if we see a rejection like previously, then overall I feel the market may take a downturn and still look back towards 2,300 and the bullish foundations holding around 2,250 to 70. Wrapping up with oil, the market broke through the key level of $82 and posting a 2-month high. There is a little bit of divergence here and an overheated ADX, so I'm a little bit cautious in viewing any further rally, and that is could see a downturn back towards the support areas seen at 79, 70, 75 and reassess. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the day.